It's time for Triple Play, the three stocks that we're watching in the final 30 minutes of trading. We have Grindr, Carvana, and Tesla on deck, and Jared Blickery is joining us for this one. So my pick is Grindr, ticker GRND, the world's largest LGBTQ plus dating and chat app. Now, newly public Grindr stock was actually soaring more than 400% at one point. You can see there it's pared down, but still up almost 200% on the day. Now, this is after going public with merger via SPAC with Tiger Acquisition Corporation. Now, trading was actually halted at one point today, but 98% of shareholders redeemed their shares rather than staying on through the merger, meaning that Grindr has less cash on hand. Now, CEO George Aronson didn't seem worried, calling this a long-term play and telling CNBC that Grindr makes money every month. It's a very profitable business, and because users love the business, they spend no money on marketing, and that their margins and growth are strong. Now, when Grindr first agreed to this merger back in May, the company was valued at about $2.1 billion, and they had 11 million monthly active users. They also released preliminary 2022 results for the first half of the year, adjusted revenue of $90 million. That's 44% higher versus the same period in 2021, and adjusted EBITDA rose 26% to $42 million over that same period. So a lot to like here, a strong day, but as we're seeing there, from being 400% up to 200% up, it's quite the change there, Sean.
Yeah, Rochelle, I think there's a lot to digest, at least at those growth numbers. I guess if you take them at face value, they do look impressive. But when you take a look at how some of the stocks that are similar, that are in that industry, have been behaving, Match Group, for example, off just over 60% year to date. So certainly we have seen a bit of a pullback within the sector. I think also the big debate out there is how recession-proof a stock like Grindr or Match Group is, given whether or not people are going to pull back on spending or maybe no longer subscribe to some of their dating apps if we do see a recession or if we do have higher prices, which has certainly been the case. So I think that is a massive potential headwind here for the company moving forward. There was recent numbers from dating.com saying that 47% of people reported that they've held back on scheduling a date to save money in the past 3 months. Jared, I'm not going to ask you if you're one of those people, but I think it does point to the fact that people are rethinking how they are spending and what that means over the next couple of months. So certainly that could have business implications there for Grindr.